Hello and welcome to the Clean Bill of Wealth podcast for Canadian doctors. I am your host, Galen Nuttall. Join me as I interview doctors and related professionals and talk about what it takes to achieve wealth in this, the Great White North. Not just wealth as measured by a bank account, but also family, faith, and health. Be sure to go to GalenHelpsDocs.com. That is Galen, that is how my name is spelled, helpsdocs.com, to get access to my free video series where I uncover the top myths about growing your wealth as a doctor, north of the wall. Now, please enjoy the show. Welcome to a Clean Bill of Wealth podcast. I am your host, Galen Nuttall. Today I am joined by Mark Noble. Mark is a lawyer at Templeman in Belleville and works with a lot of doctors, which is the topic of the conversation today. What does incorporation look like for doctors? Mark, thanks for being on the show.
Thanks for having me.
And that was a very brief intro. Anything else you'd like to add around, how you got into becoming a lawyer, a little bit more about yourself?
Well, I am originally from southwestern Ontario and got into law school after working several years as a commercial realtor in southwestern Ontario. And my wife and I were looking for a change of pace, something with a little more steady income. And I've always had the idea of being a lawyer in the back of my mind as a way of really adding value to the people that I interact with, the businesses that I interact with. And so I took a flyer. I studied at night when I was working, wrote the LSAT and said, look, if I do okay on it and it's enough to get in, then I'll do it. And I did. And, kind of here we are. Went to Queens and graduated there and got connected with this firm, which is, probably the biggest one between Toronto and Ottawa. Knew that the big city life wasn't for me and my family. And so we decided to stay here, and luckily enough, got connected with one of the best commercial corporate lawyers in the area, and he's been training me for the last going on 5 years now, and here we are.
Very good. And so most of your practice or time is spent with some sort of a corporation, right?
Yes.
Okay.
Yeah, we'd be corporate and commercial lawyers or solicitors. So if you've got something to do about suing somebody, I'll pass it to the folks downstairs on the litigation floor. You won't see me making cool courtroom submissions, things like that. We're setting up companies. We're helping businesses transition from one generation to the next. If somebody wants to buy a practice, sell a practice, if their accountants are telling them that they need to do certain things in order to plan for taxes and things like that, we'll get into the minutia of that and set it up for them.
Yeah, very good. And
or if like a doctor's doing, buying a building, if a doctor is leasing space, needs help reviewing contracts with suppliers, there's financing that's getting involved for the purchase of some big equipment, things like that.
Yeah, absolutely. And this is an unsolicited plug for Mark. Mark you've helped me with a few things, and what I like about your approach is when I bring something to the table, you don't just kind of read through it and say, okay, good to go. You ask me what's going on here? What's a little bit more background on this? I feel like a lot of times it can happen where a professional just kind of does. I guess, just to put it in the context of my role, people come to me saying they want to do things, but before we do them, I need to know why. I need to know a little bit more about the background, not just from a personal need to understand standpoint, but also from to make sure I'm doing the right thing for the client. And I've definitely experienced that with you, and I bring things to the table around different things of properties and things like that we've dealt with. So I appreciate that.
Thank you.
So when it comes to doctors, I meet doctors, and a lot of times I ask them, why did you incorporate? And this is more on the, usually what they say is, they either say, everyone's doing it, or they say, my accountant told me to, or someone told me to, or to save taxes, And so I think that there's I actually got an email 2 days ago from a client of mine who's a resident physician, and she's like, yeah, we need to talk, because I always point out to them, these are the steps, someday you're going to incorporate, and these are the signs. But I guess, at what point in time would a doctor, would it make sense for a doctor to get in touch with you? And I know there's lots of different types of doctors, from chiropractors to vets to dentists to physicians. But in general speaking, is there a point in time when it says, okay, these signs all point to incorporation?
Yeah, I think there is, and all the cool doctors are doing it, which tops on my list. But there definitely are. And I thought, just before I get into, terms of, things that I talk about all the time as a lawyer, I hate the idea of, I'm just throwing stuff around and what the heck does that guy mean by that? I thought I'd define some of those so that it can inform the talk later. So, some of the commonly used terms here are things like sole proprietor. What the heck is that? That just means an individual, a proprietor, or an owner that is personally running a business, meaning they're buying, selling, in the case of a physician or a professional, providing service. They're running a business on their own. A corporation is different. It's a business entity that's authorized by a government body. It's an abstract idea, but it's sanctioned by the state, in this case, the province of Ontario. The corporation is owned by its shareholders, and it's recognized as existing separately from its owner shareholders. So it has its own bank account, it being the corporation. The corporation owns property. The corporation enters into contracts. If your landlord is pissed off at the corporation, it sues the corporation, not you, that sort of thing. It borrows money. It files its tax returns.
Yeah, no, it's helpful. Definitely, I'm glad you did that, because I definitely wouldn't want to fall in the trap of slinging these things around. And one thing I'll say is that helped me understand.
I sound like a pompous ass when I do that.
Yeah, I need to check
some
myself
Latin
for that.
phrases in there while I got it.
Yeah, habeas corpus and all that stuff. So the thing that helped me around corporation, like I was working with when I first started as an advisor, and I understood that certain types of professionals can incorporate. Like I found it very confusing, but it helped. Like you said, it has its own bank account. It's an abstract idea, but it is an entity separate from the individual. And the one thing that I heard not too long ago, which helped me a little bit, was now I'm going to throw in some Latin, corp coming from the Latin word for body. So like it's a separate body, so to speak, a separate entity. So that kind of helped me visualize it, because I remember when I started, it was so abstract, and I heard people talking about shareholder agreements and shares and classes of shares, and I was just like, oh my gosh, what are we even actually talking about here? But yeah, like it's its own thing. It's got its own, and like you said, it itself enters into dealings with other entities or other people. So no, it's a very helpful way to sort of kick it off.
I think as society got more and more complex, people wanted to do some get into business arrangements like sending ships to the Middle East to return with spices. And I thought, well, shoot, this thing is really risky. I don't want to put all of my life savings and my farm and my home and everything into the pot with all of that risk. We want to do something separate. Isn't there a way I can just pool my money with somebody else, and we can that'll be the extent of our risk if we lose it. If the ship goes to the bottom of the ocean, all we lose is our initial investment. And people started to realize that this is an effective way to do business, to incentivize people to actually do it and take risks. And so the law of it just sort of developed around that idea. And the other things I think are important to this conversation are the ideas of a tax deferral and of active and passive income. I'm going to try hard not to stray into the accounting arena, but it's part of the discussion. So a tax deferral is the idea that you can delay, not avoid, the payment of personal taxes for a time by holding and using profits inside of a corporation, which pays taxes at a lower marginal rate than the typical physician would on personally earned employment income. Or if, in the case of a corporation, those profits were just simply paid out to the physician as salary or as a dividend. And then the idea of active income. The Canada Revenue Agency defines income. One of the ways it does is active income versus passive income. Active income is the income that a physician would earn from OHIP, from billing a client for providing services to a patient. Passive income would be if you owned the medical building and you rented it out to 3 other docs on the bottom floor. That rental income would be passive income. Active income is typically taxed at a much more attractive rate because the government is using its tax policy to incentivize doing active business because it's good for the economy. So that's another concept.
Mm-hmm.
So
and so one of the things that
going a long way around to answer your question about why do incorporate or why incorporate or be a sole proprietor.
Yeah, so I mean, like kind of what you brought up, like if someone is making, so it doesn't take long in Canada to get to the point where your personal income is taxed at 50%.
Yeah,
once you get
$215,000, you're up there.
So once you get there, every dollar after that, you're basically losing half or more to taxes.
They're 50-cent dollars.
Yeah, 50-cent dollars. When you have a corporation, the corporation earns money at a much lower. The money that comes in is taxed at a much lower rate, and then you have control over what to do with that money before you take it out personally to use it. And I remember one of the first questions I ever got when I got in front of a doctor years ago when I started as an advisor was, how should I pay myself? Or should I invest inside my corporation, or should I take money out and invest it outside? And I remember thinking at the time, these are very complex questions, and traditional sort of mainstream financial advice is really wrapped up in much more simple things like TFSA versus RSP, like much more simple things that are good to think of. But that's when I realized, wow, corporate planning is a whole different ball of wax, because they're even wondering how they should be paying themselves, how much to keep inside. So it's a much more complex thing. But I think at the end of the day, what you're bringing up is there's a lot more control around the way the income comes in, and there's a lot of tax deferral opportunities.
Yeah, there is. I think like when we're talking about physicians who are self-employed, who are out and opening a practice or thinking about it or have already opened a practice, there's two options really. There's the sole proprietor and there's a corporation. Mm-hmm. There's different structures if you are with a group of physicians, but that's probably beyond the scope of what we're talking about here. But you get into partnership type arrangements and things like that. But I won't drone on about that, I promise. Mm-hmm. And I talk about self-employed because if many physicians work in a hospital and they're an employee of the hospital, and the option of incorporating really isn't an option for a physician at a hospital who's just an employee, because the government's going to turn around and say, well, you can't just call yourself a corp and defer taxes on your employment income and pay lesser tax than you would have as an employee. No. Okay. We'll call you a personal services corporation, and we'll just we'll tax you at the highest rate anyway. So that's not really an option for people who just work at the hospital. So the group that we're talking about is that self-employed business owner physician. Mm-hmm. And so you look at, well, why would a physician choose to practice in a sole proprietorship? Mm-hmm. Well, I think the biggest reason is it's easy. I mean, you call yourself Margaret Medical Doctor and you just start seeing patients and billing. You don't have to go to a law office. You don't have to pay a lawyer. You don't have to go see your accountant. You don't have to pay any government filing fees. I'm talking myself out of business here. There's no corporate tax returns. There's no separate license from the College of Physicians and Surgeons. You have to use terms in your daily life like dividend and minute book and resolution and articles of incorporation. And for some people, it's just brain damage. I just want a doctor. And OHIP pays the money to my bank account, and I'm going to pay my expenses out of my bank account. And I'm going to file my taxes once a year when everybody else does, and that's that. And the kind of physician who it's a personal choice, and typically the physicians who are saying, okay, sole proprietor really is just the best thing for me, are the ones you're looking at it and saying, at least maybe in the first few years of your practice, well, I need all the money I'm going to earn in this practice to live on anyway, so there's no real tax deferral. I can't hold money in the corporation because I got to pay my rent, or I have to pay my mortgage, or the kids need clothes and that kind of stuff. And so there's no tax savings for me, which fair enough, there may not be. So
that's one of the signs is like if someone, especially in the early years when they're still paying down lots of debt, getting started in practice, I always find that when you go from student to practicing doctor, there's a bit of a bridge there of kind of sorting things out. Like when I work with residents that are transitioning into practice, it's like, let me get a year under my belt to get a feel for expenses. And oftentimes they're moving at that time. I mean, or they're joining a practice. I mean, there's a lot going on. So, but certainly that's something I've heard, like sort of a common theme, or at least sounds like you're saying, is if you're spending everything you're making, the incorporation may not make as much sense, because you're going to have to spend money to incorporate. You're going to have to spend money to keep the books going. But when you get to, so then would it be more of, oh, I'm getting to a point where I'm not spending everything I'm earning, I'm actually saving, then should I look at incorporating so I can have a bit more control over how I'm paying those taxes?
Right. That's one of the signs, I would say, that it's maybe time to start thinking about it. If you're a physician who is, or any professional who has a corporation, the corporation, say, earns $120,000 of it's make $120,000 of profit after all the expenses are paid. And it's great. It's going to pay 13.5% on that $120,000. Awesome. But that money is inside the corporation, and the individual shareholder that owns the business can't use it because it's any more than you can use my money. So stay out of my bank account. So the idea is then, all right, well, how do you get that money out to the physician, the shareholder owner of the corporation? Well, you've either got to pay it as a dividend or as salary. And so if you just went ahead and paid that $120,000 out because I need money to live on, then the corporation now is going to have zero in profit, because that $120,000 salary payment is an expense on its financial statements, and now you, the physician, have $120,000 of employment income you've just earned, and you just pay taxes on it in the ordinary course.
Yeah.
Okay, well, why the heck did I pay you, lawyer, to incorporate me a company just to do that? There's other reasons, we'll talk about that, but from a tax perspective, it doesn't make sense that way. Whereas if you double or triple that, you get up to, say, earning $500,000, and you only need $120,000 or $100,000 to live on, then the only money that you pay yourself out as a physician, the shareholder, would be $120,000, and you keep the other $400,000 in the corporation, and that's where the tax deferral and the tax saving comes from. If you paid that $500,000 as a sole proprietor, your only option is to just write that down on your income tax statement and file it and pay the taxes on that, and it would be around $235,000 in taxes at your top marginal rate. Because again, once you're over 214,000, that's 53-55%. And so there's there's calculators you can find all over the place that will show you the difference, but it's around $60,000 or $70,000 of tax savings at those numbers. And then the idea is that inside the corporation, you can think of those as 76 cent dollars as opposed to 50 cent dollars. And that money will go a lot further to doing things like paying the employees, paying for equipment leases, renovating the building. You've got more money available to do that, to invest in the company.
And it's certainly, there's certainly a wide array of, especially when I say the word doctor, I mean, you've got, from what I find, the simplest version of the medical professional corporation or the professional corporation is when I find a doctor who is still self-employed, but doesn't need their own practice or a building, like, for example, a radiologist, for example, as opposed to the family doc, doesn't need the clinic necessarily, doesn't need staff necessarily, doesn't need a whole lot of things. So that's like the super simple version of the corporation. And then the more complex is, as you were saying, the multiple, let's say there's a dentist owning a building with staff and equipment and all sorts of things. So it's interesting, the different range of potential complexities. Like there's the very simple, with the one doctor doing their thing and, having a corporation that doesn't really own a lot of stuff, to the one where they've got a corporation owning all sorts of things. And certainly at the end of the day, to be a sole proprietor and trying to have a business owning all sorts of things certainly starts to make much less sense from a tax standpoint, like to have to take personal dollars to buy all those things or to pay people. And
Yeah. And as the practice gets more complicated, and it really depends on the nature of your practice, how many third parties are you interacting with? What kind of equipment leases do you have? If it's really just, if you don't have a lot of employees, if you don't have a lot of interactions with third parties like that, there may not be a whole lot of liability risk on you operating as a sole proprietor. And those are things I'd sit down with somebody and talk about.
Right.
What is your risk tolerance? I mean, the tax savings of it are fine, but I'm not an accountant. I know enough about those to speak a little bit about them and to identify them as an issue. But from the legal side of it, what we're really concerned about is the risk. How do we manage the risk that's involved in the practice? And unless you sit down with somebody and figure out, okay, what is the nature of your practice? What kind of patients are you seeing? How many employees do you have? Those kind of things, you don't know that. So, and that's something you've got to evaluate. But as the risk factors go up, and as your personal tolerance for risk goes up, incorporating, makes more sense. Maybe it might not make sense on a tax side, but if you're the kind of person that sits up at night and thinks, shoot, I've got all these obligations to creditors, and if things don't go so well, my house is exposed to that liability because somebody's going to come and put a lien on it if I don't make the payments.
Right.
That's something that incorporating, helps to put an extra layer of defense between you and those creditors. I mean, you look at things like typical liabilities in a professional practice, be like employee claims from people you borrowed money to buy equipment from, the equipment suppliers themselves maybe, landlords, slip and fall type accidents at your practice, claims from people that supply you, equipment, disputes of that nature. You're going to have insurance to cover off, some of those things, but I tend to look at this as needing to you think about protection from liability in layers. So, having good contracts with your employees would be one layer of a defense against a claim from the employee. Having insurance would be a layer of protection against the slip and fall, type accidents. Incorporating would be another layer because, at the end of the day, if somebody slips and falls on your premises and say for some reason coverage is denied or something happens, the corporation gets sued, and you don't get sued personally because the corporation is the tenant, the corporation is the landlord or the building owner, and if you're doing it right, the corporation doesn't own your house. So the idea is just like those shipping magnets back in the 1600s, if the ship goes down, the only thing that goes down with it is the money that you've invested into it, not your life savings, not your house and those kind of things. Right. So that's one of the big legal reasons to incorporate it is you're concerned about that kind of liability. Other things like if you fancy calling yourself president, well, there you go. If you're setting up a medical professional corporation, you're going to be the sole, you may be the sole shareholder. You're going to appoint yourself as the director, and you're going to be the president. You're the tax reasons. You're self-employed. You're like, man, I am paying a lot of taxes, and there's got to be a better way I can save for my retirement. You're covering your living expenses, and you've got money to spare. You've got family members who may want to be involved in the business or already are in some level. They're, maybe a spouse is providing bookkeeping. Your husband is doing some upkeep around the building, and he's not earning an income elsewhere because he's taken time off to support you and your practice.
Right.
And, man, it would be nice if I could pay him out of the corporation, and he would pay taxes at a much lower rate than I would.
Right, right, because he's actually providing a service to the corporation.
Absolutely.
So the corporation can pay him pay for his services. And,
absolutely.
Yeah, I like what you said about the different layers. I never thought of it that way, but I like that. And so from a legal,
you get back to the Middle Ages. The kings there, they built a moat, then they built the walls, and
Yeah. So the corporation is like this moat, the separation between the individual's property, the individual's, like you're saying, if someone slips and falls at a practice that's an incorporated practice, so me, Galen Nuttall, versus Galen Nuttall Medicine Professional Corporation.
Yes.
Like, I got nothing to do. Like, you slipped and fell, that's my corporation. Like, that's owning that property and is running that. It's not, like, my house is not part of what's at stake if anything goes south.
Not any more than my house is.
Right. It's completely separate.
Yeah, and then that's one of the key points of a corporation, saying it's a separate legal entity. Like, that's one of the things where you go to law school and you learn about that. Oh, corporation is a separate thing. Well, what the heck does that actually mean when the rubber hits the road? Well, here is the rubber hitting the road, and that's how it affects somebody in their life. And so, yeah, that's one of the key reasons. And I mean, the extra paperwork doesn't bother you if it means paying less taxes. It'd be another thing you kind of think about, and do I incorporate or not? I'd rather pay my lawyer than the bloody CRA. I mean, like, I don't. Typical cost of incorporating would be around, $1,500 to $2,000, which includes taxes, at least at our office, and the government filing fees. There's going to be a few extra fees for the CPSO, College of Physicians, for issuing certificates, and there's you're going to pay an extra tax return each year because you now have a separate person. That separate person has to file its taxes. And so those are kind of be the costs that'll happen initially, and then on an ongoing basis, you've got to maintain that company.
Right, because then it has start like that company has minutes, like you have to file something every year, right, for the company.
The Ontario government says, okay, fine, we'll allow you to be a limited liability corporation. We recognize you're out there doing business, that it's risky, that there should be some tax incentives for you to do that, or else, why don't we just all go and be government doctors and work at a hospital, and nobody would go out in private practice, because you think about it, I mean, it's insane.
Right.
I could just go work at the hospital where somebody else looks after all the billings, and somebody else looks after all of the, make sure the employees are paid and happy, and there's the lights turn on when I get here. Tell me, if I go out and open up across the street, I have to do all that myself, and I could get sued for doing that. No, thanks. And so that's sort of the reason why the tax policies are set up that way, to incentivize it, because it's pro-social behavior. Like, if doctors didn't do what they do in small practices, think about all the staff that get employed. I would have fewer clients to service. You would have fewer clients to service. It would the services themselves are being provided to a wider population base. It's just there's so much good that goes on there. Of course, they should be able to incorporate and not have to risk their livelihoods and their houses at the same time that they're doing that good thing. And get off my soapbox here for a second, but.
No, it makes sense. It's good to hear that, because I think, if looking from the outside in, sometimes people say, "Oh, these are all just loopholes. These are all just shelters," and I don't want to get too into that side of things, but to understand
Galen's political podcast,
to just understand. Okay, I get why there should be a opportunity to incorporate for, like you're saying, the risk there is so high. Just like any business owner who has running a practice or providing a service where they can get in, someone can get mad at them and sue them or whatever that is. And so
it's not a loophole. These are all it's all legitimate planning that's in the Income Tax Act.
Yes.
And it's in this environment, quid pro is the wrong term to use, but that's the reason why is the government has said, and our elected politicians have said, we want to incentivize this thing. Now, the rules about having family members involved and doing some of that tax planning have changed, in the recent past and tightened up, but the benefits are still there.
No, for sure. And I know that it's, since I became an advisor 7 years ago, there's been several changes where people started freaking out. Like, oh my gosh, is this still going to make sense? Is this still going to work? And certainly there was some tightening up around, splitting income and things like that. And at the end of the day, I've yet to meet someone who shouldn't still be incorporated under the circumstances I've met people under. It still made sense.
It's tweaking and it's finding the balance, and
Mm-hmm.
it's a complex balance to be struck. But there's the need to pay taxes and support our social programs
Mm-hmm.
and do all those things on the one hand, and there's the need to incentivize business and
Right.
on the other. And those, depending on who's in, what the government is though, it's an ongoing discussion.
Yeah, for sure. And so one of the things I'd just you've touched on it briefly, but if someone's sitting out there, a doctor's listening to this, or a student is listening to this, and they're wondering, I wonder if I should incorporate. What is that? Basically, if they're wondering, I mean, is that when they say they should contact you, and you would ask them a series of questions, be like, okay, and you'd ask them serious questions to see whether it's the right time or not?
Yeah, I would say just call. I think most lawyers, at least I know my office, like if you call me and say, hey, I'm a doctor looking to, incorporate, I'm not going to rub my hands together in an Ebenezer Scrooge kind of way and say, oh, goody, I'm going to start the clock. Let's start talking. I'll just talk to you for 5 or 10 minutes and answer a couple questions. And if it looks like it's going to go somewhere, I'll stop and say, hey, okay, you're asking me some questions. I need to go and maybe spend a little bit of time into. And are you okay with paying me some money for this before we go down that route? But for just to have a 5-10 minute conversation about this is what I'm thinking. I think most lawyers, or at least I will point you in the right direction and say, here, think about this. What about this? What about that?
Yeah. I think people are hesitant sometimes to pick up the phone and call a professional like a lawyer. It's almost like because there's like, am I getting charged for this? How much am I going to get charged this? So it's good to be upfront about it. And I, just as an anecdote, I gave a talk a bit ago. So I gave a talk it was me, a lawyer, an accountant. And it was pretty funny because someone was asking a question and they said something to the effect of, we're getting a lawyer's time for free here tonight, and everyone just swarmed the lawyer after the talk because it's like they've been given carte blanche to like go up to, and it was pretty funny, but I mean, it really hit home for me to sit there and think, because even before I became an advisor, I remember sitting down with an advisor for the first time and wondering, is he about to send me a bill for this time? And so, I appreciate, it's like you're saying, okay, you have the call, talk for a little bit. If it makes sense, okay, now let's really look at things and enter into an agreement of what I'm going to do around this planning.
Yeah, typically what'll happen, like how do you actually incorporate?
Mm-hmm.
The whole process might only take a day or two. Like if you held a gun to my head right now and said, I need a medical professional corporation, like now, we could probably get it done in a day.
Oh, wow, I had no idea.
And it's, as long as we can get the CPSO people to cooperate with us. It's going to be, I'm going to ask you who your accountant is, and we're going to get advice from your accountant as to, what are the tax planning goals that you're looking for? Like if, I'm going to ask you questions about your life. Do you have kids? Do you have a spouse? What is your husband doing? Is he also a doctor? Those kind of factors are going to play into what kind of shares does your company have and is authorized to issue. Then, we're going to file articles with the Ministry of Government and Consumer Services. There's going to be a certificate of incorporation that's issued. As long as you check all the boxes that the statute says, you incorporate as a right. The government just can't say, no, I don't like your name, and so we're not, well, that's a bad example, but I don't like you, so I'm not going to incorporate you. If you have a name that doesn't follow the regulations, then they can say no, but we just changed the name. Then we're going to get together and we'll organize your company, set up, who the officers and directors are, issue the shares in the right way that the accountant has said. Typically, the practicing physician will be the sole voting shareholder of that company, and with those votes, you control the company. You control who, money going in and out of the bank accounts. It's almost the same as the sole proprietor.
Yeah.
There's no loss of control for you there. You set up a bank account. We apply to the CPSO for a certificate of incorporation. There's forms to advise OHIP that, okay, the billings are not going to go to, Sally. They're going to go to Sally Medical Professional Corporation. You're going to get a tax number from the CRA. We're going to set up the accountants are going to set up your payroll and your corporate tax account, and away you go. If you've been in practice for 10 years and you have equipment and leasehold improvements and a building, and those things need to get moved from you personally into the corporation, there's ways that we can do that on a tax deferred basis, meaning that as soon as you sell your building to your professional corp, you don't pay taxes on that. The government recognizes, okay, that's just a rollover, and eventually the corporation will pay taxes if they ever sell it. And I guess the concluding thoughts I would have on that is once you do set up a corporation, we will help you to do things like use it properly. For example, it's all well and good for you to have a corporation, but if you're going and just writing up contracts with your employees still using your own personal name, well, guess who's going to get sued?
Right.
And so, just some advice on that. And then, as incorporated life continues, then, again, that whole, call me for a 5-10 minute chat about, hey, what's going on here still applies. And if things come up, we just handle it.
Right. Got it.
But mostly you're just practicing and seeing your accountant once a year and filing some paperwork once a year, and away you go.
Right. Very good. And so, once it's set up, it's fairly straightforward. And one last thing I'll touch on, and you'd mentioned that this will deserve an episode all its own, but a corporate, so people call them corporate wills or dual wills. That's something that should also be considered, because now that you've got this separate entity, it should actually have its own will, right?
Yeah. I mean, it's not the corporation that has the will. The idea is that when it comes to estate planning, if you have and disclaimer, I'm not an estates lawyer. We have specialists on that. But the idea at a high level on doing a separate will would be that you have a will that covers all of the assets that you own that you're not going to need the court's approval, or that your executors are not going to need the court's approval to deal with. So, for instance, if you own a house and you pass away, you're going to need typically authorization from the court in order to sell that house.
Yep.
Shares of a private corporation, like your medical professional corporation, are different. You don't need the court's approval to do that as long as you're authorized under the will. As long as the executor is authorized under the will to do it.
Right.
And so, but the problem becomes is if you have one will and there's just one measly part of your estate that requires probate to deal with, everything requires probate. And so that lumps it all into the probate process, which exposes your estate to estate administration tax, to potential claims from creditors. It's just a messier and it's a longer process. Whereas if you have two wills, we call them corporate wills and all other asset wills, the idea is we're going to put all of the assets that we know don't require probate into one will, meaning we're going to have the authority to deal with those assets is set out specifically in that will, and it authorizes the executor to deal with it. And so someone asks, well, how are you have authority to transfer the shares of this corporation? Well, this will says I do. And that's fine. And so then you avoid the risk of having your medical corporation lumped in with the rest of the estate.
Right.
And it kind of goes on like that. So it's something to consider. And just even having a will itself is just good planning and good practice. Right. You're going to, as a professional, you need to think about things like having specific powers of attorney to deal with what happens if you get sick and are unable to practice for a while. Who's going to look after the patients, the client files, and in your will, same idea. Who's there? What's your succession plan for that sort of thing?
Got it. Very cool. Perfect. Well, I think that's definitely covered a lot of ground. I've learned a few things about corporation. So at the end of the day, if there's someone listening who says, I wonder if I should incorporate, or I need to know a little bit more.
Someone's still listening.
is wondering that, what's the best way for them to get in touch with you?
All right, send me an email, mnoble@tmlegal.ca. You can send me a text at 613-929-9023, or call the office here at 966-2620, and happy to chat.
Perfect. Awesome. Well, I definitely appreciate your time and your insight into the interesting world of incorporation and corporations, and I appreciate it.
Thank you.
Perfect.
This is your host, Galen Nuttall. Thank you for joining me at A Clean Bill of Wealth, the podcast for Canadian doctors. I hope you enjoyed the show. Be sure to check out my free video series at GalenHelpsDocs.com, where I debunk some of the myths around wealth generation for Canadian doctors. Take care and talk to you soon.